Friends, the Income Tax Bill 25 will be implemented from 1st of April 26. The income tax rules will change. The income tax returns, TDS returns, income tax challans, TDS challans and all the forms will change. The ITA 61 will be repealed and a new ITB'25 which will be ITA 25 which will be implemented from 1st April 26. Almost all the sections in the current Income Tax Act 61 have undergone a change. There are certain very critical changes for companies, LLPs, partnership firms, individual businesses as well as salaried and non-salaried taxpayers in income tax, which we will discuss in this video. And we will only discuss the examples of such changes. There are many other changes which we have identified. There are many questions which taxpayers have and which is going to be answered in the next financial year 25-26 before implementation of the new Income Tax Bill 25. And we will also discuss in this video on how over the next year, that is financial year 25-26, the taxpayers must implement the new ITB'25 so that the transitional litigation which is there when such a huge tax law is changed, that can be minimized or can be completely avoided through seamless Income Tax Bill 25 implementation. So to start with, we will discuss on 4 critical changes which will impact all the taxpayers. Number 1, as per clause 263 of ITB'25, it so seems that even if the return in ITB'25 is delayed by even 1 day, then the refunds would not be allowed. While the CBDT has again clarified that there is no policy amendment, yet if you see clause 263 of ITB'25, that is the new Income Tax Bill 25, it would be understood that in case the income tax return is not filed by due date, the very important word in clause 263 is due date. If it is not filed by due date, then the refunds would not be allowed. This would impact all taxpayers, small or large. For companies which are under the current section 115 BAA at 22% taxation regime, they can take a deduction under the current section 80M for intercorporate dividends. If we see the new income tax bill, clause 200 read with clause 148, so it seems that the deduction under clause 148 for the 22% taxation regime for domestic companies will not be applicable. For LLPs and partnership firms paying tax under alternate minimum taxation AMT at 18.5%, today there is a carve out, and in case you have long term capital gain taxable at 12.5%, that would not be liable for AMT at 18.5%. But if you see clause 206 of the Income Tax Bill 25, so it seems that even LTCG would be liable to AMT at 18.5% and not at 12.5%. And the last example for salaried taxpayers who get a reimbursement of the conveyance to and fro the office from the employers. As of now, such reimbursements, and there are many litigations on this, but so it seems from the ITA 61 that these reimbursements would be taxable perquisite and not tax-free perquisite. But if the company owns or hires a car and gives it to the employees, then it will be tax-free perquisites. If you see the clause 17 of the new ITB'25 in detail, so it seems that all 3 modes, if the company owns a car or hires a car and gives it to the employees, as well as in case the company gives a reimbursement of the conveyance to and fro office to the employees, all three cases the amount would be treated as tax-free perquisites. So now there are many questions which would require to be answered over the year, and how the income tax bill 25 would be implemented. The TDS TCS credits of ITA 61 or the MAT AMT credits, the carried forward of losses, the unabsorbed depreciation carried forward, all of these have to be transited to the new ITB 25 regime. So for that, maybe a new form is there, or it is important that these should be kept to the bare minimum to the best extent possible when you are filing this return for financial year 24-25, and thereafter when you file your final income tax return for financial year 25-26, so that the transitional disputes can be kept a bare minimum, if at all. Next, what happens to the advance pricing agreements that are applied for and that are pending on 1st of April 26? Would they be thereafter decided under ITA 61 or ITB 25? So it is better to close all the APAs to the best extent possible within 31st March 2026. If you are an exempt entity, say you are a non-profit organization, you have an exemption currently, you have an exemption certificate, whether the same certificate would prevail under ITB 25 or whether you have to reapply and re-get a new certificate. What happens to all the choices you have made by filing for, say, if you are under the old regime, you have filed the form 10IC or IE for opting for the new regime. Whether you have to again file a form or the same form would continue in ITB 25. They have clarified that all the rights, privileges, obligations, liabilities under the ITA 61 would continue in ITB 25. But would there be a procedure to implement those continuances? Those all need to be decided in the current financial year 25-26. Very important. Do all the Supreme Court, High Court, ITAT decisions in ITA 61 regime, would they be applicable to ITB 25, or would a new jurisprudence be developed in ITB 25? Say in case one tribunal takes a decision that the old jurisprudence will not apply, would that be a case for reopening of the assessments? What happens to all the assessments, reassessments for ITA 61 regime? Say the assessments for financial year 23-24, 25-25 or even before that, all of these assessments would be under ITA 61. The forms would be under ITA 61, and therefore you have to have 2 income tax acts for the next 6 to 8 years, and therefore it is very important that these assessments, reassessments to the best extent possible is completed in the current financial year 25-26, and you go to ITB 25 regime from 1st April 2026 with a clean slate. So what all needs to be done for implementing ITB 25? You have to ensure that to the best extent possible you file the return for financial year 24-25 relating to assessment year 25-26 and clean up to the best extent possible whatever carry forwards, credits, losses, unabsorbed depreciations, etc. are there to the best extent possible. You should try to close all the litigation to the best extent possible in the current regime. You should do an impact assessment of the ITB 25 on your businesses, or if you are a high net worth individual, at least for your ITR, income tax returns. You may redo a computation as if ITB'25 is implemented so that you are ready for the transition. You have to be careful while filing your Q4 TDS returns for financial year 25-26. Thereafter filing the last ITR under ITA 61, Income Tax Act 61 regime. Thereafter your first TDS returns for Q1 of financial year, that is the tax year 26-27, your advance tax payments, your TDS payments, your first payments, they would be critical for tax year 26-27, and finally filing the income tax return, the first income tax return of tax year 26-27, that would be crucial and would complete an entire cycle. So the ITB'25, the implementation, what we understand, including impact analysis, redoing the computations, analyzing the impact of the circulars, notifications under which you may have taken shelter in the past, whether they are consistent with ITB'25 or not, because if you see the ITB'25, only those circulars and notifications or orders or instructions which are consistent with ITB'25, they would prevail. So naturally, tax officers are but revenue officers, and those which may not favor the revenue, they might come under scrutiny as to not being inconsistent or consistent with ITB'25. So all those exposures, they need to be taken cognizance of in the coming financial year 25-26, so that the transition is seamless, disputeless to ITB 2025. Thank you very much for watching. Do stay tuned. Do like, share and subscribe to this channel. We'll come out with more videos on Income Tax Bill 2025 going forward. Thank you very much.